Welcome back, everybody. Sive is here with the ForexPeaceArmy.com. Let's keep going with the euro currency. So in general, euro behaves right now rather predictable, so it really makes a pleasure to make an analysis, some estimating of some trading patterns, targets, and so on. This usually happens when the market is driven by the particular market factors, not external geopolitics or something like this. But at the same time, at the current moment, I suggest that market stands at really important point. That's my set the direction for next step. And the key for this direction stands mostly on the dollar index, in particular on the weekly chart. A bit later, I will explain why I think so. So first of all, on the daily chart, we've got the upper direction. And we said yesterday that with the hand shoulders pattern that we have, market stands actually at the final point. Bulls have no option, just push price higher. If they will not do this, we will get the drop. It was around the 1670 support when we estimated taking the position and so on. Currently, you can see that the minimum target is completed, so market has shown this ABCD upper direction. In fact, we have the pattern in place. I draw it on a fall time frame chart, but I will repeat it here. You probably already see it by yourself. It's gutter steeple to sell. Why this pattern might be important currently? Because market stands at the point that is the closest to invalidation point of the weekly bearish grabber. So this is theoretically the good point for making decision on a short entry with a possible downward continuation based on the weekly pattern. But here in particular we have the trick. Now if we take a look at lower time frame and fall time frame chart, you can see what is going on. So this is pattern once again. I show you here. On a hourly chart, we have a few things to discuss. First of all, currently, with this strong upper direction, the last part of this rally, it might be treated as a good thrust for the Chad Napoli patterns. And in fact, here we could get something like bread and butter sell. So this is first close, bread and butter buy, of course. So this first drop after the thrust, here's 30%, I suppose, from the whole upper direction. And for a short position, if you still consider it and you would like to do this, I think in current circumstances, we could wait for a bit higher retracement, somewhere to the 1770 maybe, 1775 to 618, just because based on this momentum. So here's I suggest that retracement might be a bit deeper. Then, supposedly, if bears will take control over the situation, we should get downward continuation. Why this retracement also important and attractive? Because if you take a look at the dollar index, you will see that on euro currency we do not have it, but on the dollar index we have multiple bullish grabbers that stands around it. So in fact, the lows of these grabbers is an validation point for the dollar bulls or euro currency bears. And now they stand in absolutely similar situation as yesterday on the euro currency. So they have to start pushing dollar higher, or it will be epic failure of this pattern. It means drop below this area, break out of the long-term historical support line with all consequences that following with for the dollar. So that's the option that stands here, and that makes overall decision making is very simple because you stand near the invalidation points. Your risk will be relatively small for a weekly time frame, right? So that's if you would like to take the short position. This is the point where you should think about it. Now to the tricky moment. If you take a look now on the weekly dollar, then you could see that opposite to euro, we have here two grabbers. On the euro currency, we have only this one. But on the dollar, have a look, we have also this one. And theoretically, they both are valid. So this grabber suggests that daily grabbers on the daily, on the dollar index should fail. And that's the most tricky moment here that stands right here. So that's why in the current circumstances, as we said yesterday, bears have to either wait when this target will be completed. I mean, yesterday on the fall time frame chart that we talked about here, about this one, or wait for the breakout of this low. So now this target is completed. I suggest that hardly we will come closer to invalidation point of the bearish pattern to keep bearish scenario valid. So if market somehow start moving higher in the current circumstances, it will tell you that probably on the dollar index, this grabber starts working and this grabber is failing. So that's what it could mean. So it means that that's the final area where the potentially bearish background, bearish scenario is still valid. Above it, its validity will be arguable. So that's what about the bears. For the bulls, correspondingly, you should wait for the opposite. So currently, as a bearish context is still valid and we have grabbers on the daily dollar, you should do nothing. You should wait. If bearish setup starts working, that's answer no questions. So you're just sitting on the hands, waiting when this action will be over, and so on. But if somehow you will see that market is breaking above the top, coming closer to the 1850, that will be clear signal that upward action will continue. Why? Because as I already said, that we're getting the failure of the big head and shoulders pattern. The same on the dollar index. On the dollar index, it's even greater. So it stands big daily pattern. And it will mean that for the dollar, it means the breakout of the 95 area. So that's why I think that the current placement, current position on the market is quite important. And depending on what direction we will get, it might be really extended, either to the upside or to the downside. The first stage, bears have to make the choice. So that's the last point for the bears. Then we will see what will happen next.